You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose, and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, go over a few things. Once in a while, we'll share our trade of the day. So all week, volatility was elevated. We had a ton of news, and then volatility just slowly leaked out of the market all week. Market would try to break, and then it would rally. It would try to break, and then it would rally. But this market is just too strong. I think that we can learn a lot from this deep seek, crushing this market, and then seeing how it's rebounded since. So that's what we're going to go over today. I'm in Chicago. It is raining like crazy. I wonder if you can hear that, but whew. All right, let's go to the screen. I got the chat up. Marty, Harry, John, everybody, thank you guys for joining. Okay, so here is VIX term structure. Here's what we're looking at. Usually we look at this daily. Red here is going to be that VIX 9D. That VIX 9D elevated from deep seek starting the week, from deep seek, excuse me. Can't hear any rain? That's better than not being able to hear me, so that's good. So the VIX 9D. VIX 9D got over the 23-day measure, the 30-day measure, the 37-day measure. And that's really bearish, but look what it did. It just came in all week. And when the VIX comes in like that, that's strong to where it was last week. That's why we had that overall real strong rally in the Qs. And that's what we got right now. Market is absolutely strong. What are we looking at this week? We had a cool trade in our Discord. Here's a trade that I shared. I think I shared this in mid-January, talking about the difference between Amazon and then the Amazon of South Korea, ticker symbol CPNG. We shared this for everybody in our Masters in Trading Live, and yesterday, folks were taking off this trade, being able to lock in anywhere from 50% to 100% in profit. So really nice trade for those of you who were able to jump on that little trade. The next thing I want to do is I think we're going to be busy all year. I think this market is going to be busy all year. I think this is a trader's market. When we see volatility pick up, we want to get on trades. We want to be active in this kind of environment. So I have you at Masters in Trading. Here's our website. If I go to the services, everybody in all access, you guys will have access to all of our services. Advanced notice, earnings, divergence, short-term options. If I click on advanced notice, it brings up our advanced notice unusual option activity tool. Now this tool, it shares the results and the most active names, the names that had the most unusual option activity, but then every day it releases live about every hour. So I thought it'd be cool to go over some of these names because these names are the most volatile. And I believe I did this Monday or Tuesday, and I put these names, or maybe I already erased that. There it is. These were the names that came up earlier in the week. And something you'll notice is we'll see these names come up over and over. So NNE, nanonuclear. That's a name that came up earlier in the week, and it's showing up once again. Mobley, Lunar, EOS we've seen over and over this week. So that's really what we're looking for. Oklo has been on throughout the week as well. But that's really what we're looking for. We're looking for names that come up over and over and over again. And when we look at those names, and NNE is a perfect example of a name that's just getting gnarly volatility. And that's what we're really looking for. We want to look for volatility where the market doesn't really know how to value these names. When the market doesn't know how to value a given name, that's when we could see ranges in 2025, like a low to 19 and a high almost to 50. So that's the kind of movement we're looking for. So here, I'll give you an example. If we click on the Real, that's the shopping company, right? They have an app, the Real. We're seeing unusual option activity this morning, 8:57 Central Time, 8:47 Central Time on the Real. The trade that we're seeing is the January 2026. So it's interesting. This trade, there's a full year until they expire. What we'll always do is then we go pull up the options. We have the 12.5 calls. So we want to go and look at the 12.5 calls. And that's going to be all the way out here. Now, what makes this unusual? Well, look at Feb. Look at the volume in Feb, 45, 19, 6. There's no volume at all on the put side. March, 11, 10. No volume at all on the put side. But what happens if we go all the way out to January? 500, 400, 700, 900, 300. All out of the money. Somebody is making a pretty significant bet in the Real. Now, in order to determine what exactly they're doing, we always need to go to the 1-minute chart, because the 1-minute chart, if I go back here, you'll see 847, 857. If I bring up a 1-minute chart right now, of the Real, Friday, right here. Let's look at the timestamp for 8:27. That's actually on the opening, of course. It's not 8:27, that's before the opening. 8:47, 8:57. What do we have? 8:47 is right here. And then we have 8:57 is going to be right here. And so after those trades were done, the market rallied. Now the market came right back, right? But what's important is what happens right after the timestamp. Because if the customer is buying calls, if the customer buys calls, they get long stock, right? If you buy 10 calls and an option has a 50 delta, it's like getting long 500 deltas. That might be over the head of some people. Hopefully you understand that. If someone's getting long deltas and long stock, deltas is another way of saying stock, the market makers are selling it to them. So the market makers are forced to buy stock to make sure they can stay delta neutral. So what does that mean? Well, in this example, let's look at the Real with some more data. And I do this to see someone's getting long the Real. Now, is it a reason for us to get long? Well, I don't know, because I tell you what, I am certainly not going to suggest a stock to any one of my members or to you. If it was trading 4 in December and it's trading 935 at the end of January. That's a great way to make friends in the market, but it's certainly not a great way to get long. So this is interesting. The Real is an app, clothing app, doing really well. We are seeing some unusual option activity going out to January, but this trade is not for us because we've already seen a really incredible breakout. I have the chat up, guys. Does that make sense to everybody? Is that helpful? So the Real, this could have been a really cool trade, but the only way it would be a really cool trade is if we saw unusual option activity and there was a reason to buy. Like, is it getting down? Like, we don't want to buy this. Not every trade is for every person. And this is that forced discipline where we want. Might be a trade, might be a trade, might be a trade. No thanks. No, we don't need to do that. Okay? Hey, Riz, great question. Riz is asking the last trade in the promotional portfolio. So, great question. Let me show you what we did here. So, masterthantrading.com/live. This is where we house Master Than Trading Live. You just put your email in it, and this has the portfolio underneath, which, let me see if I log out, I think I can access it. And the reason we stopped doing that, is because getting on YouTube every day, we want to be able to talk have the chat open. So, Riz, that's the reason we keep a portfolio in every single one of our programs. And something like that first trade that I shared, this was a trade that we shared just in the free MIT Live. We just didn't write it down in that portfolio, but this trade was certainly shared there. Good question. Let's go through the rest of the stocks while I'm on here. Guys, do you have any questions? Anything I could help with? Market is nice and strong. IWM strengthening up. Yeah, Riz, cool. Yeah, that was the only reason. But we didn't have the live chat on YouTube, so people were switching over to YouTube, so we're spending more time here. That is the only reason. All right, guys, that's what I got. ARM, I love. Long-term stock holdings, guys, is ARM. I love ARM. I like Microsoft. I love me some IBM. Okay? Yeah. Hey, good question. Michael, I draw lots of lines in the sand. Cool. So, our line in the sand, and I'll get to the other questions too, guys. When we talk about a line in the sand, what I'm trying to do is I'm just trying to get the market down to one simple number. And so here's how I do that. I'm always looking, whenever we're talking about what I call the line in the sand, I'm looking for that one number. So let's do it with S&P futures because that's something we haven't talked about quite a bit. S&P futures, what's our line in the sand? If we just had one number that would be bullish or bearish, what would that look like? And so in order to do that, I want the most amount of data first. So I'm on a weekly, where it's Friday, right? So the line in the sand, last week's high, 61.62 quarter, 61.6375 is this, right? That's the high that's been up there twice. So that's going to be my first inkling of a line on the sand going into Monday. Now we want to drill in and look dailies. You'll notice, look at this. These dailies are going to be the same highs as well. So that could be a line in the sand as well. But you want to simplify things. You want as few lines as possible. But this, you'll also notice, is probably this. So you want overlapping highs, overlapping lows. QQQ. QQQ. Yeah, it's the overlapping that's going to stand out the most. So I always start with a weekly. I actually start with a monthly, to tell you the truth. looking at the monthly highs and lows are extremely powerful. We are at the end of the month right now. So December, January, the January high in the QQQs, 533.82. Right away, you can use that as the line in the sand going into the market next week. Hey, Chris, love that question. Is the monthly expected move more important than the weekly? So what Chris is referring to is our volatility visualizer. So if I look at the QQQs, I love that the questions are coming in. I'm always wanting to hear your questions, so don't wait for me to ask you. Going forward, if you guys have questions, pummel me. I love it. So here's what Chris is asking about is the monthly expected move. And that's what we're seeing here. And these are really, really powerful. The QQQs closes within its monthly expected move 91% of the time. Look at NVIDIA. And we shared this in our Discord room when this was happening. NVIDIA. Now, NVIDIA has only closed within its expected move 67% of the time over the last 2 years. If we do it for 3 years, 64% of the time. But because NVIDIA is so strong, if you do get a time to get involved with NVIDIA on the downside of its expected move, it's usually a good play. But your weekly is not going to be as strong as your monthly. Okay? We want monthly expected moves, but then if you want to dig down in to see what's going on for the week, you could look at weekly expected moves. But this is what we talk about, is just staying on those edges. Brian, any Mag 7 that I like today? I like Microsoft. Aaron, as logic for that, I don't want to go over that whole trade because that's one of our divergence trades. It's one of our premium trades. But that is just a divergence trade between that name and it's the other name that was shared with it. Okay, that's a PSX, where it's a divergence trade between those two. Yeah, getting on prints is just taking profits. Hey, Dave, most people's monthly expected moves start on the first of the month. Dave, we do expected move up to expiration, the third Friday. Third Friday. And Riz, these are all proprietary. I built these. I'm really good just building with Thinkorswim. So we give this to everybody who's in our community. So everybody who's part of our all access community, we're always building these tools, always just trying to different ways to look at the market. What I found throughout my career is I trade very differently than I traded in 2005. In 2010, I trade very differently than how I trade now. In 2015, I trade differently than 2010. 2020, you have to evolve. The market is constantly changing. It's constantly evolving. So even a tool like this is just something we built recently in our community just by putting our minds together and trying to find other ways to follow the market and other ways just to stay on the edges. Okay? A lot of this is just looking at standard deviations against volatility. Yeah. Riz, you should check it out. If you want, you can learn more. Chris Warder is on here to help. But we have, in the Discord community, that's where everybody is every morning, getting on, saying good morning, seeing what's going on. Sharing trade, sharing ideas. Yeah. All right, guys. I think that's what I got. We cover everything. Thanks for hanging out with me. This was a lot of fun. Hope everybody has an awesome weekend. Everybody in All Access, hang out. We'll be right back.